A card swipe triggers more than a charge. When you tap, swipe or insert your card, it looks simple. But in the background, a request travels across multiple institutions, is evaluated for risk, approved or declined, and routed back, all in just a few seconds. What feels like a single action is actually a coordinated relay. Most people assume Visa or MasterCard move money. They don't. Card networks like Visa and MasterCard do not hold your funds. They don't issue your card, and they don't lend you money. Instead, they act as routing systems. Your card is issued by a bank called the issuer. The store you're buying from uses a bank called the acquirer. The card network sits between them. Its job is to standardize communication, route payment requests, enforce rules, manage settlement coordination. Think of the card network as the highway system, not the vehicle and not the fuel. It doesn't own the money. It directs the message. Here's what actually happens when you swipe your card. You tap your card at the store. The merchant's payment terminal sends the transaction to the merchant's bank, the acquirer. The acquirer sends it through the card network, Visa or MasterCard. The network routes the request to your bank, the issuer. Your bank evaluates the transaction and sends back either approved, declined. That response travels back through the network to the merchant. All of this happens in about 2 to 3 seconds. But here's the key detail. This is only authorization, not settlement. Authorization checks. Is the card valid? Is there enough credit or balance? Does the transaction look risky? The actual transfer of money between banks happens later, often in daily batches. So when your transaction is approved, no money has moved yet. Your bank has simply said, "We are willing to honour this payment." Most people assume a declined card means insufficient funds. Often, that's not the reason. Before approval, your bank runs the transaction through fraud and risk models. It evaluates location purchase, amount merchant type, your spending history, device or card usage patterns. If the transaction doesn't match expected behaviour, it may be declined, even if you have available credit. In many cases, risk scoring outweighs balance. Banks would rather decline a legitimate purchase than approve a fraudulent one. From the bank's perspective, false declines are inconvenient. Fraud losses are expensive. A card swipe isn't a payment. It's a routed request moving through merchant, acquirer, card network, issuer, all before any money actually settles. Once you see card networks as routing systems, not money holders, the structure becomes clearer. If you want more videos explaining the invisible systems behind everyday life, subscribe to How It Actually Works.